All right. Hello, everyone. All the breadcrumbers in the breadcrumb Decentraland universe. Welcome to episode 3 of Follow the Breadcrumbs. I am Lauren Lance, the CEO of Breadcrumbs, breadcrumbs.app. And for those who are new to these podcasts, I founded Breadcrumbs a few years ago. Basically, I got scammed in an ICO, just like most people, back in 2018, and I couldn't get access to the investigation monitoring tools that existed. So I decided to build them on my own. And, fast forward a few years later, quite a few people have used it for other reasons, including 2 frauds over 100 million. And these episodes that we're putting on for the show, the whole purpose is to interact, get some interaction with the community, so you guys can post your questions in the chat. Actually, I should have done that already, where I bring up the chat. Yeah, and the other key things here is also, just to educate on how to use breadcrumbs, because, it's not very obvious and easy for people to know how to use education tools effectively. As well, educate on everything crypto. So it's not just investigation tools, but it's also just crypto is so big and complicated, and there's a lot of terms. So if you're new to the world, we'd love to, help improve your education so you can become more effective as an educator. As a crypto person, and more specifically as a breadcrumber. Every episode, we are going to be having high quality guests who are part of our ecosystem that benefit from using the breadcrumbs tools. So for today's show, we've got Marco Mirabella from Ensuro. He'll be on in about 20 minutes from now. As well, we're going to talk about FTX, which, how could that is the thing that everyone's talking about in crypto right now. And of course, one of the main topics of how FTX episode affects us is, through the whole proof of reserves. So what I'm going to do is, we'll start talking about the FTX saga. And the first thing I'd like to talk about with FTX is around, what actually happened. Now, one of the things that's going on with FTX is, just like everything else in crypto or other industries, it's just so much misinformation out there. There's just so much noise. And how do you know what you should be listening to, what's worth listening to, what's actually real and what's not? So we're going to just start off by going through a timeline of what actually happened to get us to this point. But before I do that, one other thing I forgot to mention. At the end of the show, we will be giving out a free copy of the book, Mastering Blockchain, which I co-authored with Daniel Kari a few years ago. So this is really good for education. And, a lot of people love playing that tri-bond game. So Marco, if you're listening in, we'll play some tri-bonds later on. Okay, so let's get started here. Also some of the rules, if you're listening in, you're watching through the live stream, feel free to put in some text, put in some messages, if you have some questions along the way. We love seeing your comments. Thanks. Okay, so let's get started with the, there we go. Yeah. You guys can all see my screen. So this is the whole FTX saga. It's quite a lot that happens over the years. So, back in 2019, FTX was founded. Originally, it was founded as Alameda Search. So Alameda Research. So Alameda Research was kind of like a trading firm, and they were doing a lot of arbitraging, making a lot of money through arbitrage. And from that, they're really hardcore traders, Sam Bankman-Fried and his team. And so they decided they were going to build an exchange on their own that's designed for crypto traders, has the more advanced features and functionality in it. That was 2019. Fast forward to 2021. So Binance actually sold its shares. So Binance was one of the early investors in FTX. They sold some of their shares. Between August of this year and October, FTX and Alameda Research, they start getting a little shaky. And so back in 2021, when Binance sold their shares, sold its shares in FTX. So what I remember is they received some FTT tokens at some point. So the FTT tokens is kind of like it's a token used for utility. The utility is, as a user of these FTT tokens, I can get discounts on using the exchange, some services, some tiered membership, stuff like that. So it also kind of represents the value in the exchange itself. Okay, so at some point, Binance got these tokens. And then more recently, the real trigger that started this whole episode was on November 2nd. November 2nd, CoinDesk published an article on Alameda Research's balance sheet. Now, Alameda Research is still that trading firm. It's supposed to be separate from FTX. And Alameda Research, they're critical of their balance sheet, saying that, hey, they're worth like tens of billions of dollars, and a big majority of their value is actually these FTT tokens. When that article came out a few days later, Binance, who owns a lot, they were like a whale. They owned a lot of these FTT tokens. They just sold all their tokens, and that's the panic that ensued from that led to a lot of customers of FTX to start doing a bank run. A bank run is, everybody's going to the exchange and trying to withdraw their funds. And when that happens, I'm sure a lot was going on within FTX, but basically FTX started having a liquidity crisis where, they're worried we might not be able to, honor every customer's withdrawals, which is kind of a red flag for they don't have all the customer funds on them, which is a big no-no for any centralized service. So they reached out, this was all announced on Twitter that FTX was seeking Binance to acquire them. Binance one day later decided that they're not going to acquire FTX, which, that started to do the whole house of cards. Shortly after, throughout this time, the withdrawals stopped. So if you had money on FTX, you couldn't get your funds out. And then on November 11th, FTX filed for bankruptcy. And then on November 12th, there was an FTX hack. $450 million was stolen from FTX. So these are kind of the timeline of important events that occurred. Now, some of the things I want to talk about here. The first thing that I find is most important is what really matters. So if you Google FTX right now, you're going to get something like this. It's just a lot of noise. And, what should you be listening to? What matters? So I put together a list of it's not just going to be today. It's also going to be for the following months. We're not going to hear the end of the story. Every day, something new is going to come out. Every day, some piece of item or something. So I'd like to give you guys a guide on what is important to listen to and what isn't. So what matters most? First and foremost, the thing that matters most is what happened to the $10 billion of customer funds. That is why we're here in the first place. If it was, FTX or Alameda had lost funds of their own, they were trading their own funds that they owned. Well, that's all right. That's not such a big deal. But the whole big issue here is that FTX was holding $10 billion of customer funds, managing custody of those funds. And once they stopped withdrawals, once they prevented people from receiving all their funds, then you know that there's something wrong. They're not holding on to all those funds. And that's a big, big problem. It's kind of like I put my money in the bank. I put $100 in the bank. And if I come back the next day, as a customer of that bank, I expect to receive those funds in a short amount of time. Maybe not right away, but, at some point soon. So this is the most important piece. What happened to the $10 billion of customer funds? So under that, some of the important questions: where did the funds go? Right now, there's a lot of talk, and Sam Bankman-Fried himself has pretty much admitted that the funds were commingled. Customer funds were sent to Alameda Research, their trading firm. That's not okay. If I'm a customer of my bank, I would not authorize my bank to send out my money to a casino and start gambling with it. So where did the funds go? Who moved the funds? Who knew about it? And there's going to be pieces of evidence that come out that will show what people's intentions were. So for example, there are reports that Sam Bankman-Fried received a loan from FTX or Alameda for $3 billion. Well, okay. Was that $3 billion of the customer funds, or was that $3 billion of profit they made? So over the next months, there's going to be these investigations that show where the money went. And that's the beauty of forensics accounting. That's the beauty of what we do at Breadcrumbs. We provide these tools to investigate the flow of money. Where did it go? Where did it come from? So this is really what's most important. Then there's also the hack, the $450 million hack. Okay, well, that's pretty sketchy. So who did the hack? Where's the money going? So actually with Breadcrumbs, here you can see Zach XPT. He's one of our most active community investigators, and he's been using Breadcrumbs, basically in real time to watch these funds be funneled from Ethereum, through the Ren bridge into Bitcoin. And then once it's in Bitcoin, it's already gone through a mixer, and even through the mixer, Zach and his team have been able to, follow the flow of funds in real time. Some of it recently just went into OKX. So, this is an ongoing story, and of course a hack itself, no question is that's a crime. Number three, so how much will customers get back? So there's $10 billion in liabilities. Well, how much can the authorities seize? They might go out and start selling some of the houses, some of the assets that FTX owns. And hopefully that will add up to $10 billion. But looking at precedents from before, it never really does. It ends up being more like, 20 cents, 50 cents on the dollar. So we'll see. Another big important question to ask is, there's systems designed to protect us from stuff like this. What happened there? With all these regulators, all these, compliance, and why didn't they protect customers of FTX? Why didn't they alert? Why didn't they stop FTX from this before? And another important thing that I think most people don't realize is this is actually a story about people, about financial fraud and people, not crypto. The only crypto piece that resides in this is that the financial service that FTX provided was in the cryptocurrency space. And so that's really important because this is a centralized service. This is not a DeFi platform. This is not a smart contract. This is mostly about financial fraud. Okay. So that's what matters most. And over the next months, these are the kind of things, when you hear all this noise, this will help you filter through it. What matters less? Well, blaming bank runs on FTT tokens. You're going to hear a lot of excuses, a lot of stories to help deflect what happens. You're going to hear about SBF had made donations to Democrats and Republicans, and there's just, they all live together in the Bahamas in a house, and they're all kids, and starting yesterday, SBF, the previous CEO of FTX, that's him on the bottom right here. He started doing a whole PR campaign. So I think he's on Good Morning America this morning or tomorrow. And, I can only speculate what his intention is, but my guess is it's to change the narrative. It's to set the tone of the narrative. And of course, what matters less is that he's sorry and made mistakes. It's very black and white when you take in $10 billion of customer funds and then they're not there anymore. Other things to keep track of. So there's a lot of collateral damage. It's not just the $10 billion that was lost of customer funds. It's also, there's lots of companies that had funds sitting in FTX that money is now gone, or it's frozen for months. They can't operate. So, now BlockFi, they just filed for bankruptcy yesterday. They have between $1 billion and $10 billion in liabilities. There's other crypto companies, Multicoin Capital, a lot of other crypto companies. We just don't know yet, because it's still pretty fresh, but there's going to probably be other crypto companies that are going to file for bankruptcy or can't pay their vendors, or who knows. There's also investors like Sequoia. They're just writing off the loss. $150 million just gone. Quite a few other high profile investors as well. And then you have a lot of celebrities who promoted FTX. They've lost a lot of their brands value, and now they're all receiving lawsuits, including, the commercials are great. I love the ads. But unfortunately it's these are things that are also impacted. It's a whole ripple effect in the industry that just will go away. Other further collateral damage. So this picture here shows like Sam Bankman-Fried, his whole network. He had a ton of investments through Alameda in a bunch of, a lot of these are like crypto companies. BlockFi is down here. Oh, wow. He even invested in Masari. Okay. So yeah, there's a lot in here. Yuga Labs, they do, they have a lot of cash already, but they do the Bay Area, was it the Yacht Club NFT group? So yeah, there's quite a lot here, and we're still waiting to see. Some of the other collateral damage. So this is sort of the best stats we can find for retail customers, but in total, we know there's about 1 million people who are owed money, including myself. I just had a small amount, so I'm pretty lucky, but, Singapore is number 2 on here, and, South Korea. So I personally, just in the last couple of weeks, I know people, they've lost their life savings, or, now they have to go get a job. So it's pretty sad. It's pretty destructive. just this one event. So one thing I want to talk about is one of the other outcomes of this event is this whole concept of proof of reserves. And there's a real big challenge that exists. And this whole idea of proof of reserves is, hey, we have a centralized exchange. We're holding $10 billion of customer funds. How can we prove to our customers that we actually are holding those funds? How can we prove that we didn't just siphon it off to somewhere else? And so that's the challenge with proof. Excuse me. Proof of reserves. This is a term thrown around quite a lot. And what I want to do is first define it. What we really want to do here is called proof of solvency. Solvency means for every dollar that I'm holding for customers, all of my liabilities, I'm holding that in custody. Proof of reserves is a bit different, but generally the whole concept here is, on a customer account, it shows their balance. It says you got some Bitcoin Cash, some Solana. As a customer, how can I know for sure that my money is actually there being held by that exchange? So, with Breadcrumbs and other analytics companies, we provide the tools so that you can see the data on chain. But, as Breadcrumbs and analytics companies, we can only see the right side here. We can only see what's on chain. There's no way we can know, we can't see inside the database, the ledger of that exchange. So, the best type of system that exists right now is, I'm gonna switch here, is Kraken. They pioneered this concept of proof of reserves in, let me just switch here. Okay, is Kraken. So let me just bring that up. Kraken proof of reserves. And the whole idea here is they've hired a company to go out and yeah, here it is. Okay. They've hired an auditor to go out and they send all of the customer balances to that auditor in an encrypted format. Auditor receives it. They go through the ledger of all the customers. They then do an audit of what's on chain. And then they match it up and check to see that the funds are there. So at some point, you need some third-party auditor to help with this. Kraken, they use some sophisticated cryptography as well to keep it secure. And the nice thing about it is they put the audit pretty much on chain, all the findings on chain, because the nice thing about being on chain is it's immutable. It's not like you can go into the database and change it. And it's actually the auditor that does that. They're the ones who go on chain. So yeah, that's a really important thing that's going on now. And, from our point of view at Breadcrumbs, we were thinking about this. We're like, well, how could we help the community? So over the past few weeks, a lot of other exchanges have released their crypto addresses. And so from Breadcrumbs, what we've done is we've actually gone out and you can go to monitor.breadcrumbs.app and you can look at any exchange in real time and see all the funds going in and out of their systems. And so why does that help? Well, it doesn't really prove proof of reserves, but if anything, it kind of gives you a sense of how much funds they're holding. So this is crypto.com, for example. This is just adding up. Okay, yeah, about a couple $1 billion worth of crypto that they're holding, the customers. the fun thing that everyone always loves to talk about is there's usually a lot of Shiba on here, a lot of Shiba tokens. But then the other advantage with this is a couple of things. One, you'll be able to see all the funds, you know, in real time, watching all the transactions going in and out. The other thing we do is we set alerts. So if you come to any one of these dashboards, you can subscribe to our alerts. And what we do is we'll send you an email, we'll send you an alert when more than, you know, 1,000 Bitcoin or 10,000 ETH has left the exchange. So, you know, if that happens, you know, those are kind of big warning signs. Yeah, and so those are some key things there. And this is something that we think would be a very positive contribution to the community. Cool. So I'm just gonna, let's see if there's any you know, comments. But yeah, that's for the most part. We're gonna be seeing a lot of stuff happening over the next you know, few months. We're gonna be seeing, I think today the CFTC chair is you know, they're doing a hearing with Congress. So over the next few months, we're just going to be hearing a lot of stuff happening. So that's kind of the whole FTX saga. This is kind of a helpful guide for you all. I hope that helps with you. Oh, yeah. The other key thing that we're going to be seeing is politicians using this as, you know, a reason why we need more regulation. Keyword here, regulation. Yeah. And the last point I want to make on this was this event is about financial fraud, you know, just like Bernie Madoff, just like Enron. And this whole episode actually validates why we need DeFi, decentralized finance. You know, essentially the whole point is that we're shifting our trust from people, which is really where the problem was here, to code. So for example, another crypto exchange is Uniswap. You know, Uniswap is all the movement of funds, like the custody of funds, is managed by code. You know, code doesn't lie to people. It can't lie. You know, you can see the code here, like it can't be changed. You know, these are all reasons why this is the whole case for DeFi. And, you know, this whole episode with FTX, in my opinion, you know, just strengthens that need for DeFi. So speaking of DeFi, I'd like to bring on one of the founders of a DeFi platform, and his name is Marco. And the, you know, the product is called Ensuro. So, Marco, are you there? Yeah, we're, I think you might be on mute. Okay, just some, okay, gotcha. So just some tough technical difficulties in there. We'll see if, you know, just kind of yell in my ear, Marco, and you're back on. In the meantime, just want to let people know that, you know, by the end of the show, we're gonna give away a copy of the book, Mastering Blockchain, and we're gonna be playing the world famous, you know, game of Tri-Bonds. I think Marco is back.
Yeah.
We got you here, Marco.
Yeah, apologies, like my Zoom crashed. Great to be here.
Awesome. Well, thanks for joining us. Maybe I'd like to start off, you know, this whole talk about DeFi, a bit of a segue into what you're doing. First, can you maybe share a bit of your backgrounds? Like we met years ago back in Taiwan. Maybe just talk about how you got into crypto and you know, just in 1 minute, kind of like a quick background.
Sure. So I've been in the crypto space since 2017. and ended up in the space because I used to work for a venture capital fund called SOSV. And among the different type of portfolio companies, there were several type of crypto companies that they were trying to convince me to jump in the space. So read the Bitcoin white paper and then like read the Ethereum white paper when it came out, kind of like a playing around with crypto. And they ended up convincing me and let me leave the job that I was having in the venture capital and then start a company in the blockchain space called Cartesi that started as a layer two solution, as a way to offload heavy computation outside the blockchain in a verifiable way, but still maintaining all the security reliability. I stayed in the company for
Okay. Yeah. Sorry. Go ahead.
oh yeah, stayed in the company for like 2 years and a half. Then I did a brief detour in e-commerce and price comparison website in a company called Bigo in Taiwan. Even though during that time I've been trying to put some crypto components in it. So we did a partnership with the Binance in order to provide user with a crypto cashback. But eventually wanted to like go back and start something mine in the DeFi space because I deeply believe there is the potential to kind of change most of the components in the financial system. So I left Bigo and started my own company, a new company called Ensuro that operates in the reinsurance space. So it's a blockchain-based reinsurance.
Awesome. Great. Well, maybe can you share with us what is Ensuro? You know, maybe what's the problem solution?
Yeah. So we are a blockchain-based insurance company that collects capital from different type of liquidity providers under the form of crypto, in particular USDC, and uses this capital that sits on top of a liquidity pool on Polygon in order to back up insurance products provided by different type of insurance companies and sold to consumers in the Web2 space. So Ensuro is trying to merge the Web2 insurance space with Web3 capital and inherits all the benefits of DeFi.
Awesome. And who are like your customers?
So you can see Ensuro as a double side marketplace. So
Oh, okay. Some internet issues. Okay. So yeah, I think
insurtech companies.
Oh, okay, yeah, you kind of dropped off there a bit. Maybe if you can just start from like double-sided marketplace and who some of the customers are.
Yep. So on one side, we have investors that are retail and institutional investors that deploy capital in this pool that sits on top of Polygon. But this capital is then used to back up insurance products that are coming from insurtech companies. So examples are companies that provide insurance products in the travel space or in the micro insurance space with in particular in the farming world or the crop insurance or consumers warranties. So all type of products that you buy like your everyday life. So what we're doing is that we're using capital that come from DeFi in order to back it up.
Right. Okay. Well, that's great. Is that like one of those you know, when I buy a plane ticket online and it says the, you know, do you want to insure this flight or whatever? Is that you guys? Well, or I guess your partners, right? Yeah. Okay. Okay. This kind of makes it real for me. And then the other question I have is, why does it need to be on a blockchain?
Yeah, so blockchain can provide several different benefits. So the fact that we're using stable coins on top of a permissionless blockchain allow us to enable for microtransactions. So specifically because we are on Polygon, so it's quite cheap to handle all the different type of transactions. Instant settlements. So when we receive the claim like trigger, so let's say a user decides to cancel the flight, we receive an input to the smart contracts and immediately release the funds. And it comes all with the story related to the certainty of the code. So code cannot lie and code doesn't have a judgment. So once we receive a claim, then we pay out, and there's a certainty for the users. And finally, the overall transparency of the system. So you mentioned before the proof of solvency of a different type of exchanges. In DeFi protocols, such as Ensuro, you have the proof of solvency. So at any point of time, you can check how much capital we have in the pool and how many policies are outstanding. And you can see that at any point of time, we have enough capital in order to back up.
Nice. Well, that's really exciting. That's actually that seems like a perfect example for this. So that's pretty neat. Yeah, the whole proof of resource. Is that a big problem? Like I don't really know the traditional insurance business well. Is that a big problem in the traditional insurance world?
Yeah. So essentially, like as a consumer, like the people that buy the policy or policy holders, they most of the time like complaints from insurance company that they don't. The insurance company try everything not to pay them in case of a claim.
Right.
So that's quite a big problem. And then if you take the case of AIG, for instance, in during the financial crisis, AIG wasn't solvent, so it went legs up. So similar to what happened to banks or exchanges, like that can happen to insurance as well. So all the AIG cases then led up to new regulations in terms of solvency that insurance company needs to have. But blockchain like give complete transparency on the capital that is available in whatever type of insurance products that you're providing.
Interesting. Okay, so yeah, that's a perfect example. And actually, I'm glad I have you on the show today. You know, it just fits in well with the whole FTX story. Can we see a demo of it?
Sure. But let me share the.
Awesome.
Let me share my screen.
Couple minutes. So this way, yeah, it'll be interesting, I think, for when you hear DeFi, it's decentral. Well, what does that mean? Like, how does especially for non-technical people?
Perfect. Yeah, I can take the example of the flight. So the flight booking guarantee that I mentioned before. So our partner is a company called Koala in France, and the product of Koala is embedded into different type of travel search engine like Ulysse, the one I'm showing right now. Direct ferries. That is probably the website that you're going to use when you book your ferry ticket, or even airline websites. So I'm putting like, for instance, like some random dates and destination, and the website allows you to compare all the different type of options and find the most convenient flight. And then when I purchase a flight, then the product reimburse. So the user then select the trip, put all the type of informations, and then tick the box where they can purchase this cancellation. The cost of the protection is embedded in the cost of the flight. So the user seamlessly pay with a credit card or whatever type of payment system it is used to. This capital is transferred to our partner that then converts it to USDC. And then they send the USDC together with the specific information about the policy in our liquidity pool. So our liquidity pool then is able to collect capital from different type of investors. So the capital that comes from different investors is under the form of USDC. So the investors can decide to enter in a specific pool, connect their wallet, let's use MetaMask or other type of systems, and then deposit capital that then is used to back up the risk on the other side. And you then can have all the type of metrics regarding the product. So how many policies have been outstanding at the moment? What is the type of premium that is being collected? What is the capital that we lock? What is the capital that we have on surplus in order to protect the funds of the investors? So all of this is transparent and come from our smart contracts that are on Polygon. So all the smart contracts of the system are open source. So everyone can jump in and check that what we say is actually what is in the on the background.
Right. So what's showing in like my balance and all that stuff? Like there's no way you can fudge those numbers or yeah.
Correct. So you
It's
can
all
even check. You can even check the all the policies that have been sold since the beginning of time. So right now, like they are encoded, but all the policies sold by our partners are registered on chain. And what we do is then we just take the information on chain and then show it in a much more like a user friendly way in our dashboard. But there's no way for us to modify that because it's all stored on a permissionless blockchain.
right. Yeah. There's no way you can like, remove a row in the database or anything like that.
Correct.
So it really removes the ability for fraud. I guess the ability would be through, maybe if you wrote like a backdoor or something in the contract, but then it would, anybody coming to read the code, like a developer or anything, they could just see that.
Yeah. So we audited our smart contracts through two smart contract audit firms that then publish the report publicly. So
interesting.
then it's, generally DeFi protocols in the space like utilize third-party auditors in order to check that the smart contracts doesn't have any vulnerability, and it's a guarantee for the providers of the liquidity that we don't do anything sketchy with their funds.
Right. Okay. So that's interesting. And so talk to me about like, since everything is so transparent and so like, inability to corrupt the system, are you like regulated? Do you have to get a license or, I don't know, do you have banking? Like, how does that work?
Yeah.
Is there any overlap with things that you need to do from like centralized services, like a financial?
Yep. So the fact that we provide capital to companies in the Web2 space kind of prompt us to receive a license as an actual insurance company and a digital asset business. So we received this a license as an insurance general business company and digital asset business class T from the Bermuda Monetary Authority. And these two licenses combined, they allow us to be a traditional insurance company or reinsurance company that uses cryptocurrency as a solvency capital. So, and then we can like kind of work in the same field as a traditional insurance like Allianz or AXA that you can find in your country.
Cool. Now, one thing I just want to make it clear, you said Bermuda, right? Not Bahamas. Will not
Bermuda.
be confused with Bahamas. Yeah. So FTX is in
Correct.
Bahamas. You guys are in Bermuda. And yeah, I've spoken to the regulators in Bermuda before. They know their stuff. They're really good. So yeah, maybe if you can just talk about the Bermuda regulatory framework for a bit. Like how are they like in terms of providing licensing to crypto companies?
Yep. So I can first talk about the framework in insurance and reinsurance from Bermuda. So Bermuda is one of the biggest jurisdiction in terms of insurance and reinsurance ecosystem. I think it's the number 3 in the world. So all the major all the major names that you find in the industry, they have an office in Bermuda because of the entire like a culture and the entire ecosystem is being created around them. Now, recently with the new president, there started to be a push on digital asset as a way for the island to be more innovative and enter into the different type of technology that could enhance their economy. And as part of this effort, they created a jurisdiction, so a regulation regarding digital asset companies. So the Digital Asset Act that started to put some frameworks around digital asset firms that they wanted to operate from the island. And this framework is actually quite reasonable. So one of the good things about Bermuda is that it's not a huge like country. So the fact that is as small population and the regulators are not in gigantic offices allows for a direct relationship with them and a collaborative effort with the with the different type of companies. So what they say is like, okay, we understand that the space is new, and we understand that we need to learn in order to better regulate. So there's a collaborative effort with the different type of companies in order to create rules that are reasonable, and then can foster the ecosystem instead of holding it back, as it might happen in other cases.
Right. Interesting. So okay, so you have this license. I'm guessing you have some sort of compliance program. How does Breadcrumbs fit into that? How are we helping you guys?
Yeah, so as you rightly say, as part of the digital asset license, we need to comply with certain type of requirements from the regulators. And anti-terrorist financing, and anti-money laundering are two of the main components for that. So what we're currently using Breadcrumbs for is to monitor the transactions that are coming into the system and monitor the wallets of the user that are interacting with the system. So we then use the transaction monitoring solution in order to check that the user hasn't been involved with any illegal activity. Let's say like a tornado cash or involved in a hack and trying to funnel the funds through our protocols in order to then
Right.
wash it.
I'll just share my screen here quickly, just to kind of show the audience what that kind of looks like, the transaction monitoring. So it's kind of like we watch all of the transactions going through your smart contracts, right? And then to make sure that, with every transaction, the counterparty or some of the other people involved in those transactions are not, as you said, like some sanctioned entity, or, the funds didn't come from like the FTX hack or, illicit funds. Like, people are not using your smart contracts to launder money through. And yeah, this is kind of what it looks like, where we would identify high risk transactions.
So we have a chief compliance officer that is on a daily basis using Breadcrumbs and uses all the different type of transaction monitoring tools and alert in order to then check that everything is runs smooth. And then in case we are not sure about a specific use, about a specific user, we can go and use the investigation tool to then do even a deeper analysis on the user's funds. So Breadcrumbs has been key for us.
Yeah, like let's say you find something that might seem sketchy, or you're not sure about one of your customers. Like, what would you do then?
Yeah, we can jump into that specific address and then understand all the previous transaction that the user has been doing in order to understand if has been connected with any illicit activity or has been performing tricky type of operation that might raise flags. So we combine these two systems together with also the KYC process that we put in place for the liquidity providers in order to have a complete solution that allows us to be compliant and safe within our protocol.
Great. I think that's really helpful for the audience to hear, and especially people that come from the compliance world, coming into crypto. It's kind of what you described there. We'll be coming out soon with what's called a compliance handbook. So that what you described there is kind of like we call the compliance life cycle. The crypto compliance life cycle of how you use all of our tools to power your compliance program. So I guess,
and I think the fact that you have a complete transparency on chain, paired with solutions like Breadcrumbs, gives superpower to us, and then give complete transparency to the regulators. So all the data are on chain, but a solution like Breadcrumbs allow us to visualize and have a first glance and a detailed analysis of what's going on in the space. That it's unheard of. So you can have that type of transparency with cash. So
Interesting.
blockchain, so that we see like a quite a huge benefit from using blockchain.
And how's the reception been? I mean, from the regulators, like, because this is all new, right? You know, it's new to all of them. And
Yeah, they liked a lot the fact that you can monitor at any point in time our solvency requirements, like with the jump into Polygon scan or the jump
right.
into
Oh, okay. Technical issues again there. I think yeah. He was just on such a good roll. I want to know what the regulators are saying. Okay, I think Marco's back now.
Yeah, back
Cut out there.
every time on the
They're
on the clue.
they're jumping onto polyscan. So you're educating them, I guess. That's a big thing too, eh? Like you got to be educating them on how they can use these tools. Because I guess the thing is, like, you know, before crypto and DeFi, like, they couldn't really have this level of transparency and openness like they did, you know, with the banking world and you know, all these silos and databases where they're prone to corruption.
Yeah, like I mean, it was a very nice like a situation in which I was on a train on the 31st of December on a call with the regulators trying to explain them how to use Polygon Scan. And actually, what they allow us to do is actually to use crypto, so USDC, as a approved asset for our minimum capital. So there's a certain type of minimum capital you need to deploy in a bank account, but in our case, in a wallet that it's necessary in order to operate a company in Bermuda. So what I show them is like, okay, here's me transferring the capital to a wallet that we control. Here, me transferring $1 out to show you that I have control of this wallet and $1 back in. So that's the kind of the good thing about having like regulators that have like the right approach to technology and learning from it. And also like there's a new technology that needs to be learned, and there's a lot of type of benefits that can be harnessed.
Right. And I guess, you know, the sense that I get as well is one of the nice things about Bermuda, like, there's just not a ton of politics there, right? Like in the US, you know, even now, like like we're gonna wait and see what the chairman of the SEC says, and you know, all these different politicians have different agendas. Like when it's so big, the country, and there's so many politicians, so many different entities involved. But from how you're speaking, it sounds like, you know, the real nice thing in Bermuda is there isn't all that overhead. You know, they genuinely care. You know, they're genuinely doing what's best for everybody, as opposed to, you know, their political career.
And also the type of regulation that they write. Actually, I can go there and check the different type of acts that are the ultimate document that needs to be referred to. So there's the Insurance Act for whatever type, like concern insurance, and the Digital Asset Act for whatever concern digital asset. And I can go there and see the type of requirements. So when I go and discuss with the regulators, I can have a first-hand discussion with them without needing like 3 or 4 like third parties that intermediates between me and them.
Yeah.
So that's what I like about a small jurisdiction with a precise regulation.
Yeah, no bureaucracy, and one person you're talking to instead of multiple regulators. So we're going to start getting close to wrapping it up, but one last question I'd like to end it off with for you is, what, you know, if somebody's starting out with a DeFi project, what advice would you give them in terms of getting started with their project itself, and then how to think about regulation?
Yeah, I think like it's one of the generally bear markets are one of the best time to start because you don't have a lot of noise around you, and you can focus on the product. So, and actually like what we've seen in the previous bull market is that a lot of companies were kind of inflating the returns of their products with liquidity mining or such things. that were making it difficult to understand, like if you were operating in an interesting space, if you were providing a product that was providing value to the users. So essentially, I have that feedback loop that it's you can find in any Web2 companies or in other startups. So I think that's a very good time to start. And upsides are immense. Since you're operating in what can potentially be the new financial system. So DeFi can be the new bedrock for financial systems, and it's getting built as we speak. So, and the good thing about blockchain protocols and DeFi in particular is that you have a
That's yeah, just cutting out there for a sec. But I think he was starting to get into you know, the advantages of blockchain there. Okay, well, I guess we can start to wrap it up. We got a few more minutes here. Marco, are you there? Still cutting up. Okay. So so yeah, that was really interesting hearing from Marco about Ensuro, and I actually didn't even realize like how well it ties into the lessons learned from FTX here. So we're going to move on to the next part, the final part of the show, which is everyone's favorite part. It's, you know, book giveaway for what we call Tribond. So of course, whoever you know is listening in, we're going to play this game called Tribond. So I'll give you an example of how this game works. Okay, so yeah, he's just texting. Looks like Marco dropped off. So the way the game works is, you know, I'm going to list out three things, and you know, you as a user was, you know, you got to answer. The answer is, what do they have in common? These three things. Oh, we had a question from Calvin Jones, but is Marco back? Okay, so maybe we'll Kelvin, thanks for your question. We'll connect you guys afterwards. So Marco, are you there? Okay, you're back.
Yep.
I'll introduce you to this game called Tribond, and we're going to play with everyone listening in. So we're going to give you three things, and you got to tell me what they all have in common. So this is just an example one. You know, this isn't for the book yet. What do Mt. Gox, Quadriga, and FTX have in common?
So they all been hacked.
Okay, yeah, well, they did have hacks, but yeah, they're all like crypto exchanges that shut down. So you're pretty much on the right path. Yeah. So that's kind of how the game works, an example of how the game works. So let me just share my screen. Now, of course, the topic we just talked about might be a clue into what this is. So I'll share my screen there. So what do these three things have in common? Uniswap, Aave, and compounds. So throw it in the chat, all those listening in. And whoever answers it first, you will receive a copy of the book. Do you know what it is, Marco? Don't say it out. Just kind of nod. Yeah, yes. Yeah, you think you got it? Okay. So for the copy of the book, let's see, you know, who can get that right. So again, that's Uniswap, Aave, and compounds. Hopefully it's not too difficult of a challenge. But basically, they fit into a category of like similar to what we just talked about with Marco's company. What is that term we use quite a few times? You know, what does the whole FTX event make a case for in crypto? All right. Just two people. Oh, code is law. I love it. All right. So Kelvin, you are the winner. You just beat out Nahima. So well done. We'll connect with you offline and send you a copy of the book. Did you get that, Marco? Did you think? Yeah, you knew what it was.
Yeah.
Okay. So yeah, like Uniswap is the largest decentralized exchange, definitely by volume type. Compounds, they provide like interest, that they're a lending platform. And Aave it's lending as well, but it's more for like smart contracts, right? Like flash loans and trading. So that, yeah, all three of these, they're all DeFi. Woohoo! Yeah, I'm feeling you, Calvin. All right, so that's 1 hour into the show. Calvin also had a question for you, but we'll connect you two offline. So I'd like to thank my special guest, Marco from Ensuro. And everyone listening in, I'd love to, thank you for listening in. And hopefully all that information about FTX was helpful. And we'll enjoy the saga as it goes along over the next few months. Enjoy or, just get sick of it. Who knows? We'll see. Cool. So thank you. Wrapping it up and playing the music, from the heavens above. I think we have some special music or some outro, something. What do we? All right. Thanks for watching. Okay.